Prioritize agriculture. President Buhari tasks African Export-Import Bank. Federal government makes $7.8 billion from sale of 53 public enterprises. Plus, Central Bank of Nigeria (CBN) releases guidelines for bilateral currency swap agreement between Nigeria and China. This is Business Express, reaching you from the network service of the NTA. Thanks for joining us. I am Amina Nujain. In the news today, about 400 million naira of the 2018 Appropriation Act is expected to come from privatization of some of the nation's assets. Director General of Bureau of Public Enterprise Alex Oko disclosed this while briefing the media in Abuja. Leah Katungbabatunde was among them.
Since the enactment of the Privatization and Commercialization Act of 1999, about 142 public entities have so far been privatized, attracting $7.8 billion worth of foreign direct investments. These funds have helped the government to meet some of its developmental needs and also address inefficiencies in some sectors. In funding the 2018 budget, privatization is also expected to play some role.
Structure to GDP ratio is extremely low in this country. And we've made the point severally that government, through its budgetary allocation process, doesn't have the funds to provide this $100 billion. It's just not feasible, right? So the best way to do this is to invite on a PPP basis.
Oko also says the Bureau of Public Enterprise is seeking to streamline the power sector recovery initiative as it is at the heart of productivity and industrialization.
Estimated billing issues, the core investors are complaining about non-cost reflective tariffs. So there are issues around the power sector program, which the World Bank endorsed recovery plan, seeks to address.
However, he expressed concern that 36 to 37% of the privatized entities are underperforming, a situation that the BPE is working with relevant agencies to address. In Abuja, I'm Leah Katungbabatunde, NTA News.
Many thanks, Leah. Now, the Central Bank of Nigeria (CBN) has released guidelines for the bilateral currency swap agreement between Nigeria and China. The Central Bank Governor Godwin Emefiele issued the guidelines in a document titled Regulations for Transactions with Authorized Dealers in Renminbi, signed by Director of Financial Markets Department, Mr. Alvin Ikuku. In the guidelines, the Apex Bank mandated commercial banks and merchant banks, including authorized dealers, to open renminbi bank accounts and provide details to CBN, which may either be bank onshore or offshore China. In the meantime, Nigeria must step up the implementation of its acclaimed policies now that oil prices have presented a favorable opportunity, as well as urgently review others if the quest for growth and sustainability are to be achieved. The senior resident representative of the International Monetary Fund (IMF) for Nigeria, Amine Mati, said the main driver of private investment is access to infrastructure, which involves electricity and good roads, which must be in place for businesses to thrive in any economy, while cautioning that foreign direct investment are attracted by favorable fundamentals. He reiterated the need for macroeconomic security and political stability in the country. In the first quarter of 2018, foreign trade in goods report released by the National Bureau of Statistics show that total exports grew by 56% year-on-year. Details with Bosede Abel.
Export of agricultural produce is put at 73.24 billion naira, representing 64% against the 44.2 billion naira in the first quarter of 2017. Raw materials worth 32.13 billion naira were exported in the first quarter of 2018 against 22.13 billion naira in 2017. Others are solid minerals 26.92 billion naira, energy goods 10.32 billion naira, manufactured goods 434.37 billion naira, while crude oil stands at 535.8 billion naira. On the other hand, value of imported agricultural goods in the first quarter of 2018 declined by 18.90% of 184.49 billion naira as against the fourth quarter of 2017 of 227.49 billion naira. Raw materials imports grew by 1.93%, representing 284.81 billion naira. Solid materials imports 12.62 billion naira decreased by 17.27%. Energy goods imports 32.4 million naira recorded 76.51%. The value of 2018 manufactured goods imported 1.189.97 billion naira decreased by 1.65% over the previous quarter, 1.209.96 billion naira. The value of other oil products imported in 2018 is put at 846.31 billion, representing higher than the value in fourth quarter 2017 of 380.03 billion naira.
Many thanks, Bosede. We are now being joined via Skype from London by Luqman Otanaga. He is a research analyst for Forex Time. Thank you for joining us on Business Express today.
Pleasure to be here.
Now, commodity exports grew by 56% in the first quarter of this year. Now, what does that say about Nigeria, considering the fact that we recently came out of recession?
Looking at the import and export data, seeing that how exports rose 20% with commodity exports rising 53%, this is actually a welcome development to Nigeria, as if Nigeria continues to export, this will naturally support economic growth.
Now, based on records, we have agriculture and raw materials recording significant increases. What indices would you say is responsible for this improvement?
So when we're looking more of the agriculture increasing, we can see that Nigeria has actually moved forward to increasing rice exports. This goes back to what we were saying earlier about how Nigeria continues its quest to diversify away from oil reliance to other sustainable sources of growth. And of course, in the agricultural sector, it has there's a lot of potential. So if Nigeria continues to export via the agriculture sector, naturally such will positively impact growth.
Right. Now, still in the report, imports still remained high in the period under review. Let's paint a picture of what export is in relation to imports based on this data.
So naturally, we know that Nigeria is an import-dependent nation. That's one of the reasons why we saw the nation being under pressure back in 2016 with the recession. But as time goes on, as reforms are created, naturally, probably when Nigeria starts to export more than imports.
Mr.
Hello?
Luqman, how
Yes?
would you say Nigeria should and can balance imports and exports?
Well, in terms of how it can balance imports and exports, so naturally if the government continues to invest in the manufacturing sector, as we can see, manufacturing have actually skyrocketed, with manufacturing jumping over 600% in that period. So more investment in the agriculture sector could have a situation where the nation will be able to produce more and export more over time.
Right. It is widely believed that improvement in the investment climate of Nigeria is largely responsible for the favorable conditions. Would you agree with this statement?
This is a very interesting statement in the sense that probably what we are seeing right here is a situation where foreign investors are becoming more optimistic over the outlook of Nigeria. Yes, we did see a situation where economic growth in the first quarter slightly disappointed, hitting 1.95%. But what we can see is a lot of the growth was based on non-oil products. So if investors are seeing a situation where Nigeria is breaking away from oil reliance and achieving growth with other sustainable sources, naturally such would continue to increase investments.
You are talking about 2018, where you say investors are seeing favorable conditions. How would you say Nigeria would perform in 2018? How would you describe the economic outlook?
So the economic outlook personally looks highly encouraging. So yes, we know that right now Nigeria is still somewhat oil dependent, but I believe continual signs of easing inflationary pressures in Nigeria, signs of foreign exchange stability, which boosts foreign investor attraction, should encourage the Central Bank of Nigeria to move forward with cutting interest rates, and such a rate cut should stimulate economic growth further. So yes, right now Nigeria's growth remains an oil story, but as time moves on and the nation continues to diversify away from oil reliance, the outlook looks very encouraging in the medium to longer term.
Mr. Luqman Otanaga, a research analyst at Forex Time in London, thank you for joining us on Business Express today.
Thank you. It's a pleasure.
Now, moving on. The new excise duty for alcoholic beverages and tobacco approved by President Muhammadu Buhari took effect from Monday, June 4th, 2018. The Minister of Finance, Kemi Adeosun, in March announced that the President had granted a grace period of 90 days to manufacturers of products, and the new excise duty rates would spread over a 3-year period from 2018 to 2020 in order to moderate the impact of prices of the products. She stated that upward review of the excise duty rates from alcoholic beverages and tobacco was to raise government's fiscal revenue and reduce health hazards associated with tobacco-related diseases and alcohol abuse. The International Monetary Fund, in its 2017 mission, advised Nigeria to raise the excise duty on a stick of cigarette to 5 naira. We are now being joined by an economist, Mr. Charles Encarta, who will discuss this policy further. Welcome to Business Express.
Thank you for having me.
Now, since this announcement of this new policy, we have had mixed reactions: imports, exports, consumers. Which side do you fall on?
I follow the path of what is good for the country. And Mr. President acted properly in consonance with Section 13 of the Customs, Tariffs, etc. Consolidation Act, which empowers him to change, remove, vary in whatever form import duty or excise duty, as the case may be, based on the recommendation of the Tariff Review Board. And just like you have said, they usually have 90 days grace period for commencement and implementation. So, Mr. President, having approved this review, slight review in specific excise duties, it's going to have two folds. One is to increase revenue, and I'm sure they would have reviewed the 2018 budget and the fiscal measures and looked at ways and means of raising revenue to support the budget for 2018. So I believe Mr. President and the finance minister and the economic team, they would have thought it appropriate to do that. So I follow on the path of what is good for the country.
Talking about being appropriate, how timely do you think this is?
Well, if you do peer country analysis, Nigeria, even with this increase, we're just coming up to 23.12%. If you look at Algeria, Algeria is about 38% plus. South Africa is about 36% plus, and Gambia is about 30%. So Nigeria is a leader in ECOWAS. And what has happened is just in line with the Council of Ministers' recommendation for member countries to harmonize the legislation on excise duties. We are not quite there, but it's an improvement coming from where we were before. It was on the average ad valorem 20%. So this slight increase is timely. We will continue to look at ways and means of raising revenue to fund our budget. Our budget has to be funded.
That brings me to my next question, raising revenue. Government is looking for revenue. You did make mention about revenue. To the layman on the streets, how does that affect him?
Well, layman on the street, whether he smokes or not, whether he drinks or not, Nigeria produces about 21 billion sticks of cigarettes per annum, out of which 9 billion is exported. So that leaves about 12 billion sticks of cigarettes to be consumed within the country. The excise duty translates to about 126 billion naira, which is about $330 million additional revenue. So, and the excise duty on alcohol beverages will translate to about 360 billion naira, which is about $1 billion over the period in question, 2018, 2019, 2020. And if the budget is implemented appropriately, it will trickle down and affect the lives of the common man. So if we tax alcohol consumption, alcohol production and consumption, and cigarette to raise more revenue to fund our budget, and that translates into implementation of the budget, is good for the common man.
Now we have countries like South Africa and other countries that we can use an example who have used this kind of policy and they have succeeded. Now, to what extent do you see us succeeding, and do you see us surpassing countries like South Africa in implementation and benefits?
Well, you don't just start running and you expect to overtake the person that is has already gained traction. South Africa, having implemented earlier, and as I mentioned, that the tariff rate is about 36%, 36% plus. Ours is just 23.12 or thereabout. We are the largest, Nigeria, we are the largest economy in Africa, followed by South Africa. So if South Africa has implemented the tariff regime and it has worked well, all we need to do is to ensure that the extra revenue that accrues from this increase in tariff, if it is deployed to the critical sectors that will affect the common man, it's definitely going to have a positive impact on the economy, which is good for all of us.
Now, in closing, how optimistic are you about this policy?
The policy has been made. If we do the right things effectively and efficiently and raise additional revenue, and we overcome the burden of not properly financing our budget, we don't have budget deficit, and it translates to appropriate and effective budget implementation. It is, as I said earlier, good for the country, it will be good for the economy, and if properly implemented, it will be good for the common man. And I believe it's a right step in the right direction, and it's also timely.
Mr. Charles Encarta, an economist, it's been a pleasure having you on the program today.
Thank you for having me. Thanks a lot.
Thank you. Now, President Muhammadu Buhari has urged the African Export-Import Bank, Afrexim, to align its lending schemes with the agricultural priorities of the present administration. President Muhammadu Buhari said this when he received the president of the bank and chairman of its board of directors at the State House. A statement signed by the senior special assistant to the president, media publicity, Garba Shehu, reiterated that in spite of impressive range of lending to institutions and industries in Nigeria, President Buhari says agriculture didn't feature well and needs to be taken on board. President Muhammadu Buhari acknowledged the fact that Nigeria was the biggest beneficiary of Afrexim loans and facilities. Now a look at commodity markets. Latest data from the global commodity market shows slumps in U.S. soybean export sales. Let's take a look at its latest commodity prices in Nigeria and across the globe. Equities market closed Thursday on a positive note as the NSE OSHA index appreciated by 1.58%. So far, capitalization has risen to about 1 trillion naira. Here are the highlights with Muplang Dakok.
The equities market firmed up by 1.58% as key market indicator closed above 39,000 basis points. Market capitalization stood at 14.1 trillion naira. 492 million shares valued at 7.6 billion naira were exchanged by investors in 4,726 deals. Market breadth closed positive as Dangote Cement and Nascon led 29 gainers as against 19 losers, topped by Seplat and Etana. Wapik, Guarantee Trust Bank and Diamond Bank were the most active to boost market turnover.
Many thanks, Muplang. How are the markets trending in some key African nations and outside the continent? Let's have the numbers as presented by Muplang Dakok.
Markets in Africa closed in mixed sentiments as South Africa's rand tumbled. Nairobi All Share Index appreciated by 0.22%, and the JSE Africa Top 40 of South Africa also advanced 0.58%. Tunisia's Tune Index closed at a negative 0.00%. Namibia Overall Index lost 0.38%, and Ghana's JSE Composite Index went down 0.95% to close at 3,076.48. Global stocks extended losses Thursday. European stocks fell with almost all sectors in red. FTSE slipped 0.10%. DAX index depreciated by 0.15%, and CAC 40 index lost 0.17% at the end of trading. United States stocks edge lower as trade tensions continue. Nasdaq depreciated 0.70%. S&P 500 slipped 0.07%, while Dow Jones Industrial Average advanced 0.38%. In Asia, Nikkei went up 0.87%. Shanghai Index dropped by 0.20% to close at 3,108.98, and Hang Seng Index gained 0.81%.
The Central Bank of Nigeria this week lowered the Naira to dollar rate for BDCs and opened a bi-weekly transaction window for the yuan. Let's see a graphic representation of how the Naira is trading alongside major currencies. where we dread the curtains of Business Express for today. Let's do it again on Monday, same time, same station. I am Amina Nujaim. Thanks for being a part of it.